Hey traders, it's Three Wave Trading coming at you with a quick video on two things. And number one, fair value gaps. I want to talk about those a little bit today. And number two, the trade that I took today using the fair value gap. Okay, this is a daily chart of the NQ, and as you can see, we've sort of put in a wave pattern here, a couple of wave patterns as we come along. And on this particular day, on Tuesday the 6th, we had a pretty strong up day, I would say. Solid day with no top wick here, with a big elephant candle, big green candle for the day. Went from 25,584 all the way up to 25,826. So a big green day. Now, what happens with a big green or a big red day sometimes, not every time, is that you'll leave a fair value gap. And a fair value gap is nothing more than a gap between the prior candle to the big move, the top of that, which is right here at 709 and a quarter, and the bottom of the following candle here, which is 728. So about a 20-point difference there between these 2 days, the one prior and the one after, that the price did not match. Okay, so what that does, it creates a gap in those 2 price points that can be a form of very strong liquidity for a continuation back up to the upside if we retest that area. Okay, so so what I did is I did mark that area, okay, with a rectangular box, and it was from 725.25 down to 708. So let's see what happened early in the morning on Thursday when price came down into that area. So early in the morning on Thursday, let's go ahead and find that area again. Let's see, it was actually, easy way to do is just check the low here. Low was 727 and the high was 708. So let's put a box here. Thursday morning, 727 to 708. And that would be an area to buy from, correct? Because of the fact that the candle was green, that was in the middle of the two other candles that didn't touch each other. Okay, so if you're up in the night and you're watching this, you're seeing that price is headed down to the area. And when it gets there, you see the spike in volume that happens as it enters the zone. That is just not a coincidence. You know that there's a lot of interest in this zone because look at that volume compared to all the volume back here. All right, price punches down into the zone and continues down. Okay, so it's a long trade, but you don't buy until price is coming back up through the top of it. Okay, so it can dip down under it all it wants to. Here it came back and bounced off the bottom of the zone a couple times, and then it started putting in some higher highs here as it traveled through the zone. Now, as it exited the zone, look what happened. Okay, as it exited to the upside, which is the side that we are interested in, the long side, look what happened. You had a massive, massive amount of buying that came in, and it pushed all the way up into this 4-hour fair value gap area from before, okay, and rejected off of that. So this move here, if you just put a buy stop above the top, that's good enough. You could have gotten in at 732 and took it all the way up to this fair value gap area here at 796 for about a 60-point run on NQ, which is a huge run. Okay, so that's an example of how a fair value gap would work on a daily chart. Now let's look at the complete opposite end of the spectrum and look at a 30-second chart. A fair value gap that's created on a 30-second chart. So that's something that I traded today, where I took a nice little quick trade, scalp trade. Let's take a look here at this fair value gap. I'm going to take it off and then put it back on again so you can see where I found it. Okay, actually that's a different, here's the one that I'm going to take off. Okay, let's take off all the lines and everything too, or like a lot of them. Okay, so price you saw moving up this morning created this two fair value gaps actually. This one here between this low and this high. Okay, and then you also had this one between this low and this high. Now I don't like to take fair value gaps long that where you're already kind of at the top of a move, It's much better to see if you can retrace a little bit lower. Here's one actually that did get responded to very quickly. See this big strong green candle here? So there was a gap that was created by measuring the bottom of this low, okay, and the top of this high, okay. So that gap got created right here, and you had the very next candle, okay, tapping it, okay, and when it did, look what happened. A very strong push up to the upside, all right. So that fair value gap got tapped, all right, and it was rocket fuel for the move up. And as far as EMAs and other support, it was just above the gold line. It was the first pullback to the gold line, which is the 1 minute 20 since it kind of came through. Now there was another one created by that strong push, okay. It was created, there was the bottom of the third candle, and here's the top of the first candle. Did you see that? Top of the first candle, here's a strong middle candle, bottom of the third candle. The two areas did not touch. That creates a pool of liquidity, which can be tapped later. Okay, this one took 1, 2, 3, 4, 5, 6, 7 candles, which is 30 seconds each. So that's about I don't know, 3 minutes, 3.5 minutes later, price came in, tapped the liquidity. Right? What happened? It tapped the liquidity. It was also, which I like, above with a MACD above the zero line, green MACD, and it was also tapping the EMA here, the 1 minute 8 EMA, the blue line here. So when it started bouncing off that level, I bought it here at just under 50, and I wrote it up for a few points to be able to take a nice scalp at about 62.5, which resulted in a resulted in about $225 win. But I'm copy trading that, so that ended up being about a $1,200 win. Okay, so I'm copying that with 4 more accounts, so 5 accounts total. For just a small scalp can really add up, right? If you got multiple accounts. So the nice thing about trading small risk units and small profit targets is that it's only a very small part of each account, so under 4%. So if I do take a loss for, and I do take losses, it doesn't hurt too bad, and I come back the next day and make it back or in the next trade. Okay, so there you go. 2 examples of fair value gaps there. One on a much larger time frame, and one on a much quicker time frame. They work on all time frames. You can find them on 5-minute candles, 15-minute candles, 1-hour candles, 4-hour candles, daily candles, weekly candles, and they all have their own way of tapping the liquidity and responding and reacting to it. Some of them deep on the daily, for example, that you just saw, price dove down under the level completely, and on the way back up, that's when it spiked. So they have all kinds of different ways of responding. You just have to keep your eyes open and see what you can see as far as how it's responding and reacting. I think they're super powerful levels to trade from, and when combined with your other favorite EMAs or other horizontal levels that seem to have strength, like maybe possibly something like a point of control from a session volume profile indicator, or a EMA cross, say a fast cross of a 5 over an 8, or an 8 over a 20, or a 15-minute or a 5-minute 8 over a 15-minute 8. Any kind of fast cross would be great. And so these are all things that you can use in conjunction with the fair value gap. And I hope this helps you in some way, some small way, to be a better trader. So best of luck to you, and catch you on the next video.